REITs have an advantage that other dividend stocks don't have. All right, you say, Jay, well, what's the advantage? Well, they have the law on their side. 90% of the profit must be distributed. That's a law.
What is a REIT? How can you make money off of REITs starting right now? And then what are some of the REITs that you can actually invest in today? Jay with the NBA, one other half of the Literacy Kings, is going to bust all that down for you right now. Let's go.
What up, what up? This Jay with the NBA. I'm coming at you with another lesson. This time we're talking about REITs, right? And REITs just an acronym. It stands for Real Estate Investment Trust, right? A REIT is like a mutual fund for real estate, right? So a mutual fund is a group of stocks, right, from different companies in an industry, and you put them all together, right? Well, REITs are the same thing. It's just you have a different investment in real estate. So instead of physically owning those properties, you can buy a stock in a REIT, which it might have 60 properties into this company, and you can buy a stock in that company that owns all of these different pieces of real estate, right? So it's a way of investing in real estate, but through stocks without having to have ownership and management, right? So REITs are very good. I have ownership in a couple REITs, and I'll tell you about them, right? Why wouldn't I just do a property? Well, it's cheaper than actually owning physical property, right? There's no management. All right. One of the things people say, oh, Jay, man, I don't want to be no landlord, man. I ain't finna be out here changing toilets and fixing plumbing issues and dealing with this and dealing with that, right? So there's no property management in REITs. They already have property managers. They already have a team of people. You're just buying an interest in the company, right? And it's cheaper than having to front your own cash for it and having to management. And it's completely passive. Right? Now, as far as the stock side of it, the reason why I pick REITs is because they normally provide monthly dividends. All right? So having an interest in these REITs, having so many shares in these REITs, you can get a monthly dividend from them, right? REITs are, a majority of them paid monthly, right? And it's hard to find good stocks that pay dividends monthly. Most of them pay quarterly or 2 times a year or only once a year. But REITs pay monthly because REITs have an advantage that other dividend stocks don't have. All right, you say, Jay, well, what's the advantage? Well, they have the law on their side. The law says that 90% of the profit from these companies must be distributed. %90 of the profit must be distributed. That's a law that says that. So, and profit is, after they maintain the property, do the maintenance on the properties or whatever's the profit part of it. 90% of it has to be distributed. So they have to pay you monthly dividends. It's a law, right? So once I figured out that law, I was like, oh yeah, this might be a good, decent way to earn, some money coming in passively without having to do anything for it, right? So I looked into REITs and I found some pretty good ones, right? So I'm gonna share a couple of them with you. One that I really, really like right now is called O Realty. The stock symbol is O, right? But I call it O Realty. All right. So you see the stock price. I mean, you see the stock symbol O, but the title is Realty Income. Right now, it's very popular. And once you start looking up monthly dividend stocks, you're gonna run into Realty. Wall Street Trapper talk about it. Other investors talk about it. They're known for their dividend, right? For being consistent. When it comes to dividend companies, you're gonna hear about Realty, right? Realty is it's a REIT. It's a monthly dividend paying stock that's investing in over 100 properties, I believe. And it's diversified. So if you want to, you can look at stock symbol O and look up Realty. Now, right now, they're at the time of this recording, they're trading about $68 a share, right? So that $68 per share will give you a 23-cent per share dividend, right? So what that means is, if you buy 100 shares of Realty, then you'll get $23 a month. So, and the more and more shares you buy, the bigger your dividend will be monthly, right? So I got involved in this because I wanted to start replacing some of my bills, right? So I said, okay, well, how much would it cost to replace, let's say, your water bill, right? So you say, okay, well, if they pay about $23 a month, my water bill is about $46 a month, right? So that's about double that. So all I needed was 200 shares. So once I got to 200 shares of Realty, I've technically replaced the money that I spend out of earned income with passive income from Realty. Now I can pay my water bill with that if I choose to, but I don't. I just reinvest it. I just keep reinvesting and buying more and more shares, right? So another one that I like besides Realty is Stag. The symbol is Stag, S-T-A-G, right? Now Stag is more industrial real estate, right? Corporate real estate, facilities, factories, warehouses and stuff like that. So reason why you're gonna like Stag Industrial is because Stag Industrial is the real estate REIT that houses Amazon, right? And if you like in Houston, they've been putting up Amazon facilities here, there. So their main customer is Amazon. Now they have Home Depot as well. They have other big name brands as well. But Stag is the real estate behind it, right? So I like Stag Industrial. It's actually cheaper than Realty as well. Stag Industries right now is about $39 a share, right? But the dividend is a little bit lower. You get about 12 cents per share, right? So all you gotta do is multiply it out. If it's $39 a share, then that means 3,900 will get you 100 shares. All right, and after that 100 shares, instead of 12 cents, you be getting $12 a month, right? And you can just keep spiraling, which is cool. $12 a month, 12 times 3 is 36. So every 3 months, you can start using their money to buy more and more shares, right? So let it snowball. That's the whole point of dividend. You're not gonna get a lot each month, but if you let it snowball, then that means the next month the check's gonna get bigger. Then the next month the check's gonna get bigger, and before you know it, you'll have a decent amount passively. All right. So this is again, this is Stag Industrial. All right. Like I said, I found out that's who run Amazon's. Right. I thought Amazon's owned their buildings. They don't. They don't own all of their buildings. They go through Stag Industrial, right? Stag already had the engine running. All right, they build facilities real quick. All right, they run it, you house it in. So in case Amazon got to move, they just end the lease with them, move somewhere else. Stag finds another company that comes in, Home Depot or whatever, who needs that big warehouse size, and then they rent it out to them. So it's not just Amazon. but that's who Amazon has their contract with, right? So there's other ones. There's LTC. LTC is that's the stock symbol. Limited Corporation, I believe, is the name of it. But they do a lot of residential, and they do nursing facilities, right? Stable income, right? Assisted living facilities and stuff like that. People that, you know, they come in monthly and it's pretty consistent, right? And I believe LTC at the time of recording, they're in the 30s per share as well, right? And they pay, actually LTC pays 19 cents for dividends. So these are just 3 good examples. I mean, there's more. As far as one thing I want to warn you about is the dividend yield, right? So you say, oh, Jay, I want the highest yield. Well, when you come to investing for dividends, getting the highest yield might not be the best thing, because it might be an indicator that the company is in trouble, right? So they might be saying, oh, we're gonna pay a lot. We're gonna give you a high yield to invest money because they need the money to keep coming in because they leaking somewhere, right? So always do your homework, always do your research, and I would keep the dividend yield, me personally, I would keep it less than 6%. All right, so I would keep it less than 6% on the yield. That way, you'll find the more safer companies have the dividend yield less than 6%. It's just something that I've picked up doing my research.
Yo, if you still rocking, thank you, man. I hope you got a lot of value out of that video. Make sure that you like, you subscribe, you turn on the notification bell so every time we drop something, you get it. Stay locked.